0.01 or 10 lots? Which one do you choose and why? What up, folks? Welcome to Forex Insights SA. I'm your boy Ed Cat, and today we're talking about how to calculate your lot size. Now, lot size calculations are integral to your risk management strategy. So if you haven't watched my video on risk management, go ahead and watch that video first, because you're going to need to understand those concepts in order to truly grasp how to decide on what lot size to pick. So when deciding on how to pick your lot size, you basically have two options. You can either go with a fixed lot size strategy or a variable lot size strategy. And which one you end up going with is going to be based on your particular trading strategy and what your risk management plan is. A fixed lot size strategy works best for a trader who trades a strategy where your stop loss tends to be very regular. These are traders who tend to trade pivots, key levels, breakouts, and similar strategies where you know your stop loss is always going to be 15 points, 20 pips, 25 pips, regardless of when you're taking the trade or where you're taking the trade. Your stop loss is always about the same size. That kind of trader is going to benefit from a fixed lot size approach. Because the stop loss doesn't change, the lot size or the amount you're risking per trade also doesn't change. For traders who like to trade strategies where the size of the stop loss changes trade to trade, traders who like to trade SMC, ICT, and similar strategies, then you can't go with a fixed lot size because the stop loss you're using changes trade to trade. One trade, you're going to be using a 10 pip stop loss. The next trade, maybe you're using a 13 pip. The next trade, you're using a 20 pip. Your stop loss is then going to have to adjust according to that trade, and thus your lot size is going to have to adjust according to that stop loss so that the amount you are risking per trade remains consistent. So what you can gather from this, if you have not watched the risk management video, is that what we're trying to control for is risk per trade. The stop loss might vary, the lot size might vary, but regardless of which approach you take, the risk per trade is what we are trying to keep consistent. So once you figure out what your method is going to be, either the fixed lot size approach or the variable lot size approach, this is how you're going to go about calculating it. To calculate your lot size, you can use a lot size calculator. I like using this one from cashbackforex.com. And it is a really easy and simple to use Forex calculator. So you're going to add whatever pair that you're looking for. Let's go with Euro USD. You're going to add what the account size that you're trading with. Let's go with a $10,000 prop firm account. And let's say your stop loss is going to be 13 pips and you want to risk 1%. It is then going to calculate for you what your lot size is going to be and what your total risk is going to be for that trade. So you can see on a 13 pip stop loss on a $10,000 account, you're going to use a 0.76 or round it up to 0.77 lot size. If you hit stop loss on this trade, you're going to lose $100, which is 1% of the total account. And you can do this for any pair at all. You can also do this if you're trading personal funds, and let's say you are trading in South African rands. Let's say you have 1,000 rand in the account and you want to risk 25% of that on a 20 pip stop loss trade. You can then see that you are going to risk a 0.06. You can round up to 0.07. And that is going to be 250 Rand for a 20 pip stop loss. So if it goes 20 pips into profit, you know you're going to make about 250 Rand. If it goes 20 pips into drawdown and hits your SL, you're going to lose 250 Rand, which is going to be 25% of the total balance. And that is as simple as it gets. If you're someone who is always going to use 20 pips, then you know that, okay, I'm always using 20 pips. I'm always risking 25% of the account. So my fixed stop loss Oh, my fixed lot size is always going to be 0.07 for all my trades, and you only need to calculate this once. If you're someone who's going to do this variable, it's going to change trade to trade. Let's say sometimes it's going to be a 12 pip stop loss, sometimes more, sometimes less. Then you need to calculate this for every single trade you go into, but it will tell you the exact the exact lot size to enter based on your stop loss. And there you have it, folks. That is how you go about calculating your lot size. If you found this video helpful, go ahead and hit the subscribe button, hit the like button, share this with your trader friends, and I will see you in that next video.